Markets are doing. Shares in Asia closed higher, with tech stocks in the region jumping following similar gains overnight for their counterparts on Wall Street. And China, the focus on debt-laden China Evergrande Group's real estate unit and its coupon payment due on a local bond. In the Hong Kong side of things, the Hang Seng Index climbing up 1.4% in the final hour of trading. The Nikkei in Japan gaining 0.6%. European stocks are cautiously higher, attempting to find direction amid positive global sentiment. U.S. stock futures mostly higher, or rather modestly higher in early pre-market trading as investors geared up for a big day of earnings with Netflix, Johnson & Johnson, United Airlines and Procter & Gamble all due to report. To take us in terms of how the market is performing so far, we are joined by Martin Smith, who is a portfolio manager at Anchor Capital. Martin, thank you so much for your time. Let's have a look at the JSE. I mean, given what's happening globally and the sentiment that's moving around, how's that filtering through to our markets?
So as you are very well aware, I mean, we take our cues from global markets, and risk sentiment seems to be moving in the right direction. And we've seen things like the rand, commodity prices and stocks all pick their head up a little bit after the kind of risk off sentiment or feeling that we had the last couple of weeks. And I think this has been quite a common theme that we've experienced, I would say, for the better part of the last 12 months. You have this seesaw of just sentiment of 1 week, everything is perfect, the world's okay. And then the next week, things are going terribly. And it's literally this continuous seesaw, but overall markets continue to grind higher. So I think the lesson here is be invested, be cautious, but just be in good companies because things are ticking up nicely. Equities are probably the only game in town, and liquidity needs to find a home somewhere. So again, seesaw's tipping in the direction of risk on at the moment, and long may it continue, I guess.
When it comes to those, anxiety-driven themes that we were seeing over the past few weeks or few months or so, are they still lingering in the back of the mind of investors, or what is the case right now?
Absolutely. And I think the big thing that's kind of abated in the last, I would say, week or two is kind of fears around US inflation. And I think that's going to be the biggest driver of where markets end up for the rest of this year. And I think people were worried that inflation wasn't transitory, as the Fed kept kind of saying. And I think there were also other things, for example, what's happening in China in the property sector there with Evergrande. So there were a lot of things going on, but things seem to have kind of resolved themselves from Evergrande's perspective, although they got another coupon payment coming up. The CPI numbers out of the Fed and the Fed's minutes that came out last week also seem to, like I said, abate fears around inflation picking up too much. So for now, I think people are feeling cautiously optimistic, but make no mistake, these potential issues are waiting in the corner.
When you look at our local markets, I mean, probably a week or 2 weeks ago, there was news around, concerns around JSE delistings. We had some companies announcing that they will not be part of the stock market anymore. Some people speculating about what's next. Are you thinking that there might be more delistings in the foreseeable future?
I do. So, I mean, let's put this into context, right? So over the last 30 years, we've averaged about 14 delistings a year on the JSE. At the moment, we are at 21 toward at the back end of September already. So we're well ahead of kind of the run rate over the last few years. And I think we will see it. And I think that'll be for a number of reasons, right? So, I mean, if you look at kind of the lack of liquidity that's going on in the market and the multiples being applied to a lot of these businesses, these businesses aren't on multiples or ratings that they actually deserve. So it comes down to two things. One, so in the example of the Anchor Group, we say, do we actually need to be listing? I mean, you've got manpower that needs to, like CEOs need to see investors, et cetera, et cetera. You've got costs and all these things. So a lot of companies saying, let's just go private. And on the other hand, you've got private equity businesses or other listed entities offshore. For example, in the case of Imperial Logistics, where they're saying there's actually massive value with this business. So let's start to look to acquire
President Cyril Ramaphosa, who has taken to the podium. Let's cross to that.